Good evening, all. Ira Epstein with your metal market wrap-up, and this wrap-up is for the evening as we're here now on Tuesday, the 6th of January, 2026. And no, you're not reading this wrong. Up $1.19 in the silver tonight, gold up 8.6, copper pretty flat, and platinum actually lower on the evening. All right, that's where you're starting. Most of the foreign currencies, as you can see, are close to unchanged, but down a little overall. In the energy markets, they're getting hit one more time. I'm going to repeat that I am still very much in the bear camp long term in the energy market. You'd have to show me a reason not to be, and nothing looks to me like that. And you can see nat gas, well, it's maybe too overdone, and maybe it's time for it to pause a little bit. But what we want to talk about are the events that are going to happen tomorrow. So tomorrow, you're going to get the Mortgage Bankers Association. They're going to come out with their weekly market index at 6 a.m. ADP, the private sector jobs data, will be coming out tomorrow at 7:15. The U.S. job openings and labor turnover survey, JOLTS, will be released at 9. Factory order data coming out at 9, ISM data at 9, and I think we even have Challenger Gray, if I'm right, tomorrow. So that's the corporate layoff. So we'll want to see how these numbers all come in. Now, before we get going into the charts, and there's a lot to talk about tonight, I want to remind you there's now only 2 sessions left on the 9th. My sale ends. So as you can see here, January 9th, you're now on the trading day of the 7th tomorrow. So you're coming to an end. 40% off. This is the biggest amount I offer in the year. Everything after this is a smaller amount. If you're interested, you can take 3 months. You can get the package combo. That's what I'd recommend, a minimum of you doing. My charting course is 40% off 1 year. So now it's down to $360. That's a big discount that you get in there. And you can do the 1 year, of course, in the Spider ETF. But you just go to iraepstein.com. You can also move your cursor up here. There'll be an icon typically there. You'll have an icon here if you're watching me on YouTube, and I do hope you take advantage. So let's go to the charts and see what we're going to have here for ourselves and where this all fits in for you. So let me get over here. And here we come. On a weekly area chart of closes for the gold market, well, you're getting close to the all-time high of 45.56. You're at 45.03. We'll see if it can do anything with it. You can see on a daily bar chart, you came up, back down, and you had this big pop in the market. You're still pretty far away, though, from the high that you made here at 45.84, and that's still $80 away there. When we take a look at the gold with the swing lines, you have a lower low and a higher high pattern. So that is bullish on that chart. When we look at the momentum and where you're over the 18-day average of closes, which happens to be over the 100, which is over the 200. And that gives you the bullish bias. But you don't have the pattern of higher highs, higher lows. That's the only thing missing. So where's the resistance? It's near the highs up at 45.60, the upper Bollinger Band. That is typically the target the market should have the problem with, the first challenge of it. There's others. There's window envelopes, but I show them in my subscriber videos first thing in the morning. When we look at the slow stochastics, you are not in overbought territory yet. So there's room here to make the run if you hit stops now to carry the market up here. That's all that I could say about it, but I am looking at that as one of the ways. Now look at the gold-silver ratio. Ever since you have been under this 18-day average, you can see once you got there, you've just come down. You've now halved the market from where it was. If you look back here, you were at 104.26 in April of 2025. You're now at 54.80. Pretty impressive, right? In the silver market itself, here is the market challenging the upper Bollinger Band. It is not embedded. I think the pros, as I said up here, will take some money off the table. I think they're going to do it again right here. If they bought back here, they're getting their reward. But remember, you don't make money till you come out, and markets don't grow to the sky. In the copper market, You now could have 3 days over the upper band if you can stay up. I think one of the reasons it's watching the other markets go and it's not is it realizes, and traders that are students of Bollinger Bands, that the odds favor the market's going to try to get back into the band, not stay out of it. That's typically what happens, and you're overbought. So this is definitely an area, the way that I teach charting, that I think professionals are taking some money off the table. In the platinum market, don't know what happened to the label here, but surprised it's not there. In any case, I can see that the scaling got off, and that's probably what has happened here. But in any case, the slow stochastics overbought. The market coming up, and like the other markets, the high, 2584.50, the highest high the market's ever made. That's going to be the big challenge for this market. Let me just make sure of what I'm saying. High 2584.50, and today's 2487.80. I read it wrong. I said, how could that be higher? It's not. It's $100 under that an ounce. I think that the pros at the upper Bollinger Band, if it gets there, will do just what I've said and take some money off the table. The dollar is acting stronger than traders have given it recent credit for. It bounced away from the Bollinger Band, and when it closed over, right over here, these two sessions, when it was trying to close over, finally, the 18 and the 100-day average, the next resistance was the 50, and it cleared it. So now on the way back down, it visited support, and it's still looking okay. Do I think it's a buy to get over and stay over the Bollinger Band? Of course not. I look for the market to have troubles right here as I look for the euro to find support on this current break. But that's how I'm looking at the markets right now. You can see that the bonds and notes are fairly stable at this point. This is a big week for labor. That's what we'll all start watching, and that's what the market will gear up on tomorrow. Again, our sale, remember IraEpstein.com. You can move up here, over here if you're watching us on YouTube. You have a great evening, and I will catch up with you all in the other videos tonight or first thing in the morning.